All right, welcome everyone to today's webinar on the new phase of SMSF investment strategies. My name is Aaron Dunn, and thank you for joining me from wherever you are, whether it is at home, like a lot of people are currently doing. Today in Melbourne, we reached the milestone of 200 days in lockdown. Certainly not something to celebrate, but it is something that you do raise the bat in cricket terms. So for those of you in New South Wales, obviously, and other parts of the country, hopefully I can give you a little bit of technical feel and a little bit of insight into the areas of investment strategies that I see and perceive as being really important as we move forward, because we will begin to see a bit of a shift, in my view, from really tidying up what was an area that was lacking from a compliance point of view when it came to SMSF investment strategies, to now drilling into one critical area within that definition of the SMSF investment strategy requirements in SIS Regulation 4.09. And that is that we must regularly review. And what does that mean in the context of that regulation? And with the heightened increase that we have seen from the ATO, and then also our gatekeepers being the auditors in this area, it is an opportune time to be working through this as we move into our next year of compliance. When we look at our Smarter SMSF platform over the course of the last 12 months, this has been our most utilized document on our platform, even where we have provided a number of free COVID-related documents with early release and so forth. So it gives you some context as to just how important this topic is. And in my view, why this topic is going to continue to be important as we move through this financial year and then into future financial years as well. So let's, I guess, give you a bit of an understanding of what we are going to go through today. Of course, we all know the rules of our disclaimers. So please obviously take that into consideration in respect to today. So we're going to have a look at the state of play with investment strategies. We'll then look at, in particular, as I said, our core focus today is around our regular review function that sits within the operating standard. I want to touch on then the auditor's role and the observations, because it's not only important to be hearing it from me, but quite clearly the expectations of auditors have been shifting. And many of you that are doing this work, and in particular engaging with auditors, will have seen that level of expectation in the information that is required here has ramped up quite significantly. So then what we'll do is we'll go and drill into, I guess, the key lessons. So where do we find these key lessons that we can really utilize within this review process? Then what I want to do is jump in and show you what we have actually built in this space to obviously support you, that expands our suite of investment strategy documentation. And I'll do that with some of our key integrations that we have both inside our own platform. So I'll show you using our class integration, but then I will show you also inside Simple Fund 360 and how you can order that as well. And then finally, I just want to tick off for you once again, we have done this with this topic previously, but what you can and can't do. So how to prepare an update and review a strategy. So your role, this is one of the very reasons in the analysis that we've done over time as to why we produce a template here. And then quite clearly, we'll finish off today with a little bit of information about obviously how you can look to order this information as well. So the first thing I want to do is just maybe get a bit of a poll and representation from you about which of the following statements that you can see best represents your situation with SMSF investment strategies. So are you licensed and you help prepare this information? So limited license, full license, and therefore you take an active role in the way in which you engage with trustees in that investment strategy preparation. Are you an unlicensed accountant? So therefore, you do have to tread carefully. And as a result of that, you provide a template of information, and that expectation is that the trustee will need to complete that. Are you unlicensed and you simply refer that stuff off? Are you a fund auditor? And therefore the level of interest here is really making sure that we have that quality of documentation in play, or is it something else? So I really want to try and find out here, what is the audience here that I'm talking to best understand the way in which not only we are building documents, but also how you need to go about obviously looking at this particular issue in the eyes of your existing professional status. So we might just give this another 10 seconds or so. We have a pretty good representation here of people. So I'll count it down, 5, 4, 3, 2, 1, and we'll go there. So I'll end the poll, and what we can see if I just share those results. So quite clearly, and this is really the expectation that we have had, and in particular why there's been so much success with our investment strategy template, is that we do have a very big cohort within the accounting profession that is in that unlicensed space. So we do need to tread quite carefully here in terms of what we can and can't say and how we can actually engage with trustees on this particular issue. So I'll stop sharing that. Thank you for sharing that information with me. That will be a big help, obviously, not only in the context of today's session, but obviously certainly supports the way in which we build these type of documents for you as well. So let's kind of take a step back first and understand why we are where we are at today. So this is very much triggered initially from the Council of Financial Regulators review and going right back to the Murray inquiry, where we did see this notion of LRBAs and whether they should or shouldn't exist within the superannuation landscape. Now, to address that, we did see the ATO quite clearly write to a number of individuals, around 17,700 there, targeting this issue of diversification and the lack of diversification when we look at the conduct or requirements of that conduct when operating and looking at that operation of SIS Regulation 4.09. So this specifically targeted SMSFs with 90% single asset class, and therefore we both saw letters to the trustees and letters to the auditors that suggested how have the trustees evidenced, and auditors make sure you see that and are satisfied that there is sufficient evidence that they have considered that diversification requirement. Now, that in itself sort of morphed into something much larger, and we have seen the ATO quite clearly expand its narrative on their expectations and requirements on self-managed super fund investment strategies. So we did see here this expectation then released in the guidance in February 2020, I think it was, about what is expected here. So this single page document that replicated the legislation was quite clearly not acceptable. They went to the extent that a range of 0 to 100 is quite clearly not acceptable, and focused on the importance of giving effect to the fund's investment strategy. So the personal circumstances of those individuals in order to help meet the retirement goals. So what you can see on the right-hand side here is the statistical summary from our most recent SMSF annual report for the 18-19 year. And again, you can see here, it doesn't matter which sort of asset concentration area you look at, in particular in the 18-19 year, but if we put a stake down at 80% asset concentration or single asset class, you can see that nearly 43% of funds have a level of asset concentration at 80% or more. So we do have an industry here that quite clearly has a far greater level of asset concentration than we would naturally see in APRA-regulated funds. And there are concessions within the regulations that really enable that to occur. If we do think about business real property as an example, the attraction to property for SMSF, but we have also seen historically this concept of mum and dads and the use of equities and the mum and dad index, ASX index and that sort of stuff, because they have been the ones since the 90s that have actually invested into equities and ridden that wave with franking credits and the like. But what it means is that we need to ensure that the investment strategy is adequately reflecting the retirement goals and the objectives that are being set, and ultimately being measured from a performance point of view towards that. And quite clearly over time, we have seen a focus on, let's tick that box to what 409 says. But when you kind of peel a few of the layers off and try and really understand what the operating standard is requiring the trustee to do, that hasn't necessarily occurred. So what we're looking to do here is to give some context to the expectations of both what the regulator is doing, but most importantly, what trustees should really be doing in this area to make sure that they are reaching those retirement goals. So today is all about this one word of review. So regular review is set out within the operating standard, and the ATO here makes very clear that the strategy, the investment strategy, is not a set and forget document. Okay, so it's not something that we do once, we stick in a cupboard, or we scan now, we put into our online portal for our clients, and it never sees light of day again. So it's clearly not going to get the dust anymore being online, but we need to come back and be looking at this. And that obligation is that there is a review, and that review must be done regularly. And that regularity of that review is there to ensure that the fund continues to meet the current and future needs of the fund's members and their own personal circumstances. So what then does the ATO indicate here as being review events? And this is what they provided in that guidance that I referred to on the last slide. So there are significant events in the ATO's mind that should prompt a review of the strategy. So things such as a market correction. Now, when did we have a market correction? Quite clearly, over this COVID pandemic period, we've seen markets be very volatile. So what action or inaction has occurred in respect to the way in which the fund is invested? It may be where you have a fund that has residential or commercial property, that there has been rent relief. So markets may have moved one way or the other, but there has been a correction in terms of the cash flows and other abilities for the fund to meet loan repayments if they have sought loan relief from an LRBA perspective. There is also going to be events such as changes in the membership profile. So if there is a new member joining the fund or someone else departing the fund, that is clearly going to impact the asset base that is inside that fund, and therefore the mix of assets that may be able to support the objectives that that fund had set out initially. And the other one then is, of course, when a member starts an income stream. And this all leans towards the ability to have sufficient liquidity inside that fund to be able to meet the minimum pension or whatever the pension requirements are of that individual or individuals for that income year, and obviously those income years thereafter. So the ATO does make very clear that as an absolute minimum here, the trustee is expected to review that strategy on at least an annual basis and ensure that they have documented that decision and any actions that arise off the back of it. So again, this comes back to how well are we documenting the decisions here around this regular review process. And the way that I perceive it from what I have seen historically in this area is that it is insufficient in the context of what we have learned over the past 12 to 18 and even 24 months. And hence why we need to look at what is, I see as this new phase for investment strategies. So I want to, I guess, give you some context now about the role of the auditor. And there are auditors on here today, and please feel free to chime in on the chat and kind of validate a lot of this stuff that I'll be talking about here as well. But what we have from a review point of view is that on an ongoing basis, the auditor is going to need to ensure that the fund has met the investment strategy requirements within the SIS regulations for that relevant financial year. So again, it's the operating standard that sets out all of that issue of risk, liquidity, diversification, and et cetera, et cetera. So this means that the auditor is going to check that the fund had an investment strategy in place for that relevant year and has considered the factors that are outlined within the operating standard. They will then look at that the fund's investments during the relevant financial year were in accordance with that strategy. So they're not here telling you whether it's a good investment or not an investment, but they are looking for triggers. Are they inside or outside of the ranges? Did we have material assets in the fund with asset concentration? So were those assets potentially listed? And how have the trustees provided information that would support the fact that asset concentration inside this fund within a single asset or single asset class will go towards meeting the objectives of the fund? And then finally, that the strategy has been reviewed at some stage during the financial year, and that may end up being multiple times in different fund circumstances. Now, consideration of the relevant events that have occurred. So again, it may be through any particular COVID impacts. It may be with new members of the fund coming in. Of course, we now have an expansion of the number of members allowed from 4 to 6. So there will be an ongoing range of things that we need to be considering in the context of the fund's overall investment strategy. So again, this is not about set and forget in its approach, and we are simply measuring it on 1 year alone. So a lot of you may have spent that time over the last 12 or 18 months getting investment strategy documentation up and in order for your clients. The fact that it would now be done and signed off does not mean that you've done what you need to do. It is going to be incumbent upon the trustees here to now demonstrate year on year on year how all of the requirements of the SIS Regulation 4.09 have been satisfied each year. Some years it may be quite simple. It may simply be an annual review that satisfies that requirement, and adequately covering off those areas is going to be a much easier exercise than other years where there have been different events that occur that need to have a bit more attention paid to the investment strategy off the back of those particular events. So again, just need to understand these areas further and why auditors will be asking these questions of you. So what are we observing here? So quite clearly, we have seen arrangements being made for trustees to update their investment strategy documentation. So if you haven't done anything in this area within the last 12 to 24 months, I'm surprised that the auditor hasn't been putting up a request for more information unless you have been absolutely brilliant in the information that you have provided to them previously, which for some of you that have spent a lot of time in this area, then hopefully that would be the case. So as an initial strategy, need to get that in place. And it was what we're seeing is it's fixing the deficiencies of what the ATO expect us to have. So we had ranges of 0 to 100, or we really didn't have a document that existed in the first place. Additional trustee minutes where necessary that gave us this dealing with asset concentration. So we had a period of time where we saw these letters that appeared and we needed to provide specific evidence off the back of those letters. We've then also seen this expectation of producing additional trustee minutes now because of this heavy asset concentration and auditors asking for more information there. So auditors here quite clearly are increasing the level of activity. And there's a couple of ones I've picked off LinkedIn here from industry peers that are well-known auditors in this space. And it's just, I wanted to share this only because it makes it very clear that whilst I might sound like a broken record on this stuff, it is absolutely happening. So off the back of today's webinar, obviously I've written some articles. Many of you as subscribers to our newsletter see our blog posts and the like. And so Katrina quite clearly wrote here, great article. As an auditor, this is one of the main issues with the audit. So we are still getting these generic strategies. They need to be tailored to the fund directly to comply with SIS. I think it is still not clearly understood in this space. So absolutely critical to all of these elements that I've spoken about. So it's not only looking at the investment strategy, as I said, to get our ship in order, but it's this ongoing review function that is also going to raise the eyebrows of auditors and therefore the expectations on practitioners and the trustees to get that information. And Joel here also in a list of the top 5 audit issues that he sees for this year, again, SMSF investment strategies, still poorly considered, and most that come across my desk look as if they've just been done in a pro forma exercise. The ATO is monitoring this and it will become an issue. All it takes is an aggrieved third party to be disappointed and they will lawyer up. It's already happening in other areas of the SMSF world. So again, just wanted to share a couple of examples there with you to say these are things that auditors are looking for, and therefore our expectations, and these auditors as gatekeepers provide a really valuable role back to the ATO to ensure that we not only have our financial audit done, but obviously the compliance audit as well. So there is a real lack of tools then to be able to demonstrate how trustees are undertaking a regular review of the investment strategy. So the outcomes, I guess, before we kind of go into the solution, because if we don't comply with this requirement set out in SIS Regulation 409, we end up with these compliance breaches. So if the auditor here identifies a breach, we have the ability for the trustee to fix this by potentially signing and dating some form of addendum to a strategy, or we may require a trustee minute which adequately addresses the requirement that's set out within SIS Reg 409. Now, there's no financial threshold test when it comes to the investment strategy requirements, but we can get to a contravention when the auditor here, they'll need to lodge a contravention, I should say, to notify of breach if it meets any of the contravention reporting criteria. So the criteria here will be met if either the auditor has identified the same breach in a previous income year and there has been a repeat of that in the current income year. So the need to ensure that we have an investment strategy that has been satisfactorily prepared and provided and meets the requirements of what the auditor is satisfied for SIS Reg 409, and it is a breach from a previous year that remains unrectified at the time of audit. So again, this is going to impose that requirement to get the investment strategy done, but then there's again this expectation that we'll need to keep the currency of it and the considerations of the trustees current in making sure we continue to meet that operating standard. So what are our reference points here that we can go to in respect to investment strategies? Okay, so we've seen, and many of you, if you've been to any of these topics that we've done before, these are really our 4 pillars to what I see as our reference points when it comes to investment strategy. So our deed, it sets out the decisions that must be followed when we have an investment strategy in play. Okay, we have our ATO and auditor expectation and guidance. So we've got our guidance that is being provided by the regulator to support trustees and fund auditors. And that information that is on the ATO site is now really powerful in the context of what the expectations are of the regulator to ensure we have our SIS Reg 409 met. But the detail of it isn't as in depth as what we would see in something like our APRA guidance, because whilst it applies to RSC trustees or licensees, there are some really important lessons that can be extracted out of the prudential guidance that APRA releases and giving it some SMSF context. And I want to share with you a couple of these because I've done this previously in building out our investment strategy information and in the consultation that I did with the ATO on this particular topic when they released all that information on their website some time ago. Because what we're doing here is we are really just looking at the same piece of legislation and the operating standard, but just looking at it with a different lens. So an ATO compliance SMSF lens, as opposed to a RSC trustee prudential regulator that APRA is. And then finally, from an advice point of view, we have our report 575, which also includes a range of information in it about improving the quality of advice and member experiences, and does look specifically at investment strategies, and in particular, things like property investment, which is quite popular clearly within the SMSF landscape. So there's a lot of words on here, so I apologize, but I wanted to put this information down out of SPG 530 and again, give you some context on it from an SMSF trustee perspective, because this is APRA's view and expectation on the operating standard. So where we have here on the left-hand side, there's a requirement to formally review each investment strategy on at least an annual basis. So on the SMSF perspective, we have this expectation that the commissioner wants us to undertake a regular review, and it must be done on at least an annual basis. Now, APRA expects the review to include, but not be limited to, a range of key drivers of the investment strategy to ensure that the strategy remains consistent with investment objectives. So let's look at that in the context of SMSFs, because it's this expectation that the trustees are undertaking a review, again, of what the key drivers are within that fund, drivers being the investments and the way in which the objectives are going to be achieved, to ensure that the strategy remains consistent with those objectives, which is why we can put in place things like that the trustees are looking to achieve a rate of return of, say, 3% above CPI, and that's to be measured over a 7-year period. Now, again, going back down to our RSE licensee requirement, the regular review process assists that licensee to determine whether there are any evident gaps or overlaps in the governance and decision-making process, thus allowing any weaknesses within the governance framework to be addressed. So what does that actually mean? It means that the regular review provides the ability for trustees to assess that investment performance and if there are any evident gaps in here in helping to achieve the objective. So what steps are being done by the trustees to make sure we are reviewing and we're on target to what we're looking to achieve as part of the retirement goals? And then the last one on this page is where the licensee has identified that the investment strategy of an internally developed investment option is no longer appropriate to the investment objectives. We've got to pull the trigger on something. So where the option has been identified as underperforming, APRA would envisage that licensee would have a documented process in place to adjust the investment strategy. So again, SMSF's expectation is that the trustee will have a review process to assess the investments against the fund's objectives, and where relevant, make changes due to that underperformance or whatever the case may be. And therefore, it's incumbent upon the trustee to be able to document the reasons for any adjustment. So let's keep moving. This is the last two. So here we have APRA expects that licensee would establish triggers that may lead to interim reviews of the investment strategy more than annually. Significant events in the economic environment that we're in, a structural change in the membership profile, or material outflow of beneficiary funds. So these are just some examples that could render the investment strategy that exists now to be inappropriate and may trigger some form of interim review. So all of that is relevant in the context of an SMSF. So more regular reviews may be required in particular circumstances: economic, COVID-19, new or departing members, maybe even large withdrawals out of a fund. So if we do see a material withdrawal and what impact that has on the overall asset allocation and whether that is going to impact the fund objectives that the individuals were initially trying to achieve. So again, such events would warrant a review of the investment strategy. And the last one here is that the guidance requires the results from each review to be reported to the board, and where an investment strategy has been subsequently amended, that decision is sufficiently supported by appropriate justification and analysis. So in a trustee perspective inside an SMSF, the results from the review are documented. So there's a minute, there's a meeting of those decisions. There's some supporting evidence of the decisions that are ultimately made of that review and any of the changes that will arise out of the back of it. Okay, so simplified in terms of what we need to do within an SMSF because they're not being prudentially managed. However, equally important that we evidence these things because this is the expectation under a review process for the purposes of SIS Regulation 4.09. So let's take a look at what we have now done on the Smarter SMSF platform and within our BGL framework. So I'm just going to share with you a different screen here. I just need to get the right one. Okay, I think it's this one. All right, so we have now added onto our Smarter SMSF platform 2 new additional documents. So we do have our investment strategy report here. but we also now have a standalone minute for single asset or asset concentration. So we know that whilst we'd like everyone to be using our investment strategy documents, we know that that's not the case. But we do have the ability that if you do require an asset concentration minute, that you can use that from within our Smarter SMSF platform. It is also available within the BGL platform for you to be able to access as well. And I'll jump on to that one after. But we also, and what you can see here is within the detail, is that we do have it applying for a variety of asset classes. So property, including through unit trusts, shares, being Australian shares and overseas shares, cash, fixed interest, and we have now also added cryptocurrency. So both of these are available through the site to be able to order standalone, as you can do on here, or you can use our integrations page and you can order it with a connection to either Class or Simple Fund 360 there. The other one, as I mentioned, is our investment strategy review statement. So the statement here is that we are looking at all of the requirements set out within SIS regulation 4.09 as part of the obligation for the trustee to regularly review the fund's strategy. So again, where the fund has a single asset or single asset class, you'll be able to produce that minute that is included up there as part of that particular order. So we do have within our knowledge base, our sample documents around this information. I'll go through and show you the process shortly, but you can see here our investment strategy review statement. You can get an understanding of what and how we have built this. So our investment strategy document and our investment strategy review statement have been built very similarly because we understand that a lot of clients have now seen this document and therefore would benefit from the way in which we have built this. So specifically what I mean here is that it enables the trustee to be able to go through and tick a particular topic or issue that is relevant to them. So I might just see if I can expand this screen here. So what you can see on here is the first part that we talk about is the obligation of monitoring and what that process obviously looks like and the review. We have our rationale for why this review is taking place. So in all areas, what we do is we say, find a box that is relevant, that helps the client to understand that particular issue, otherwise specify something that is going to, that falls outside of what we have already put there. So this is looking at all of the issues that the ATO has raised on their site as areas that they believe and perceive, and again, consistent with SPG 530 as to the expectations as to why a review might take place. And we will also be referencing back to the initial investment strategy report, because this is not going back and producing a replica of the initial report that's been done. The objectives of the fund, all those things that have been set out initially will remain the same or do remain the same for a lot of funds for a particular period of time. So here what we're doing is we're just going through and satisfying each of those different elements within the operating standard. So we are referencing back the initial investment strategy report, and we are making sure that it has regard to all of the fund's circumstances. So we are then building some of that fund profile. We will use in our integrations the ability to import fund value, so current asset values, the fund phase, the number of members. Okay, there are limited number of areas that we can pull information in, because we do need to quite clearly understand to what extent we are allowed to prepare that information for the client without holding a license to do so. And again, we are going through each of these different elements of risk, diversification, liquidity, to be able to get the client to sign off on this, having undertaken that review. So it may be as simple as there is no change from the diversification statement that was set out in that initial report. So you can see here, there is 3 of 7 pages here. Our investment strategy report is at least twice that. There is a lot more that gets covered in it. But again, there may be some sort of change to the statement. We have our asset allocation. If there is a change, otherwise we are satisfied that that is the case and will continue to do so. We have dollar amounts, we have percentage amounts, and we also have the ability to list assets if you have a material listing of assets in the fund. So if you only have one property in cash, rather than showing the asset classes, you can simply list that property as the primary asset by rather than having to use percentages, again, consistent with what the ATO said. We've got our liquidity requirements, our ability to pay benefits and other costs. So we have some information in here that looks to a pattern of contributions and a pattern of payments and benefit payments that may come out. We have our insurance considerations that may or may not be in place. And then we have our monitoring and advice that, again, the trustee is contemplating each and every year as part of this. And rather than producing a minute, what we do here is that we will just get that signed off by the trustee to say that it has been read in conjunction with the initial document, and the resolution is to sign this and to have it obviously take effect in conjunction with, again, that initial strategy. So hopefully that gives you a bit of a snapshot as to what we have built around our review document. So you can do this in a couple of ways. So you can order this document simply by filling in all the details. So quite simply, open that up and you can go through, fill in all the details as many of you would do. And next, if you are a member, obviously that forms part of your subscription. Otherwise, on our final page, you simply will include some credit card details and enable that payment to occur. However, for those of you that may be either Class or BGL users, you do obviously have the ability to connect that system and enable you to therefore produce the review statement with that connection. So you've got here, I'll just pick my fund, that's okay. And what we are going to do is it is going to import quite clearly all of that fund information that we have on file to enable the investment strategy review to occur. So all of my particulars are inside that order form, and it allows us to go and obviously complete that in a much more simple and efficient way. So you can save that order as you go. You can obviously, once that is completed, that will be available in the completed orders area too. So I'm not going to spend time here going through and showing you all how to order documents. It is quite a simple process to be able to do, but you then obviously here have your completed order that you can download, potentially add to other areas as well. So again, this is the review minute, where we have asset concentration with property in this instance, and the rationale as to why it is appropriate in the context of this particular fund. And again, we've just put an additional reference point there as to why this is important, and some links and references for you there as well. So not only can you do that, like I said, in here with either Class, you can also do it within Simple Fund 360 as well. So we, as a partner with Simple Fund 360, you can actually do this from within the software directly. We're the only provider from a document perspective that allows you to do this. So from the connect and order documents, you can, if you haven't done it already, do a one-time connection that allows you to either choose a subscription or you can simply order to connect. You will authorize that connection, and then it will provide you with a page that does look very similar to the page that you just saw on our Smarter SMSF platform. And what that is going to do is it is going to allow you to go and create quite simply in here any and all of these documents. But again, we have our investment strategy review statement, and that enables you using, again, from a fund list, importing all of that information straight in. So I'm just going to pick one here, and it will import all of that data in that is included within Simple Fund 360 to allow you to very simply and seamlessly order the documentation that you actually want for your clients. So you can see here all the particulars go through, and then again, follow the different prompts, and it will then generate that document for you. You can save, you can go to your completed orders area. And again, that download of those documents will be in here for you to be able to access. And you can see I've been doing our testing and so forth that provides you with all that information. But those documents are now available. So you can see within the create new area within the Simple Fund connection, once you connect those two systems, you can then go in and order, and all of that information again that we talk about is included in here. So for those of you that are Simple Fund 360 users, there is a release tonight from BGL, and details about this will be within the release notes. So if you are interested, please have a look in there. But you can have a look at our sample documents if you are registered to use our platform from within the knowledge base area. And like I said, it takes you into our particular knowledge base to do so. So that helps you to understand some of the documents that we now have in place. So investment strategies generally, if you don't have those in place yet for your clients to be able to do so, but we do also, of course, now deal with this investment review, regular review requirement, and then also with asset concentration. So let's keep moving, make sure my clicker is working. Okay, so helping to prepare, update, or review an investment strategy. So what are the licensing considerations here? And we had in our presentation today, 57% of you are not licensed. So what can and can't you do? So what you can do if you're not licensed is you can advise clients of the requirements within SIS Regulation 4.09 that they must have an investment strategy. You can document the investment strategy. So as in, if you are provided with information from a trustee to put that information in based upon what they have provided you, you can do that, but you cannot fill in that investment strategy document for them. Now, there is within within the Corporations Act, Regulation 7.1.33, that does provide some wriggle room around the discussion of diversification. My guidance that I've been provided is that it's quite complex, I guess, to be able to rely upon that. So what I say to you who are unlicensed is to stick to facts. Okay, so stick to the requirement of telling the client of the need to have an investment strategy, to be able to regularly review that investment strategy. And there's nothing wrong with you providing them with a template of information that they would need to complete. If they can't complete that, then that is where the advice function is going to need to be considered. But what the ATO also makes very clear is that don't just throw up some pro formas that really don't have the trustees having considered what SIS Regulation 4.09 requires. So both Katrina and Joel, in those screenshots that I shared with you earlier, they do regularly see, and I'm sure this is the case with other auditors, and I'm more than happy if auditors on there can validate this as well, just in the chat area. But what they're saying is don't just send us something that is really just a replica of what the regulation is saying, or really doesn't reflect that the trustees have thought about this issue. Because what is clear is that they must be appropriately tailored to the fund's particular circumstances. So member A and member B here, mum and dad, as discussed as to what they have previously indicated they were going to do, and to make sure that it is regularly reviewed and it remains online for what they are trying to achieve. If you are licensed, then quite clearly the ability for you to have discussions is extended somewhat further. So you can look at things like risk profile individuals. You can consider other assets that are held by the individuals outside of super in conjunction with what they hold inside super. You can look at their short-term versus long-term income needs and the preferences of that particular individual or individuals, and that include the fund. So the rules of engagement are very different in that respect. So what are we doing to obviously help support you? So as I mentioned, we now have available a number of documents for use in this particular area. So we have our investment strategy report. So on a pay-as-you-go basis, it's $165. There are some pricing differentials to that, subject to different arrangements that may be in place. But we now have our investment strategy review document to be able to support that. And that is priced at $90 plus GST to be able to use if you want to use that on a pay-as-you-go basis. We also have our single asset or asset concentration minute, again, which covers a number of different asset classes, including property, cryptocurrency. That single asset concentration minute is included with the investment strategy report or the investment strategy review statement if it is required. So you get that as part of the top two. You don't need to purchase that separately. And one of the things that we have also done some work on previously with Holly Nethercote Law is a suite of unlicensed accountant letters, so that you are obviously following the bouncing ball in respect to the type of conversations you can be having with your clients without going over the licensing line. And as I've mentioned before and showed you, we have integrations both into Class and Simple Fund 360, should you want to more efficiently be able to produce those documents as well. And one of the things that we are currently working on is creating a form of investment strategy manager. So not only will it allow you to create that initial strategy, subject to whether you are licensed or unlicensed, but we want to create a service that will enable you to go through that review process with your trustee, timestamp all of those different reviews, reasons for reviews, documentation around those reviews, and the ability to share that information with the auditor, share that information with the trustees and other professionals, so that we have the right compliance approach to the running of that fund. And we're using our deed service, our automated deed service functionality in a similar way to be able to achieve that particular outcome. So my final poll for the day that I'd like to ask you is just around how likely you are to utilize something like this investment strategy review document with your SMSF clients. So obviously today it's been about trying to impress on you the fact that there is a greater level of importance that has been imposed on trustees around this particular area. And the reality is we have done a body of work, and as an industry that has been fantastic to get the quality of our investment strategy documentation improved. But it is not set and forget, as the ATO has rightly said. So what steps do we now need to do to ensure that we continue to comply and continue to satisfy the expectations of the ATO, but also importantly with our auditors as well? So I'm going to give that another 5, 4, 3, 2, 1, and I'll turn that poll off. And we can see there, so we know there appears to be some sort of need there. So thank you. We have 62/3 are saying definitely and probably. So quite clearly, I've imparted my knowledge to you today, has been validated that it is a critical area for us to be looking at as we move forward with our SMSF clients. So one thing I wanted to finish off with you today is what we're doing. We know that a number of you order this document quite regularly off our platform. Whether it's bought on a pay-as-you-go basis, we know a number of you undertake a subscription with us because of the significant cost saving that you get via subscription. So one of the things we're throwing at you today is that if you do want to look at our document packages, we will provide a 20% document bonus as part of any new subscription. So if you buy a Create 25 pack, you will get 30 documents over the course of this 12 months to be able to utilize. If it's a Create 50 pack, you get a bonus 10. If it's a Create 120, you get the gist. So this is going to be available for you to access between now and the 31st of August. So if you purchase that pack, we will be automatically adding to your user profile, and you'll be able to see that in your user profile. I might just quickly switch screens and show you. So in the BGL page, I don't have it because I'm obviously an admin, but you can see that information on the dashboard in respect to how many documents you have and how many you have available. And that is both on BGL and then also within our main platform. So if you are interested in that, we have David Devine, who has recently started with us in July. I think he was in the office for a week, and then he's been obviously back in lockdown like the rest of us. But you can get in contact with David. His details are on there. He'd be more than happy to walk you through how that would work. I just want to finish off here with a subscription benefit. So we have regularly, these are the conversations, I guess, that David is now having regularly and I've had for some time. But Jackie here expects to order 10 investment strategies and 8 investment strategy review statements. So we've got 18 documents. So if you bought these on a pay-as-you-go basis, you're paying just over $2,400. Now, great, you might disperse that to the client, happy days. But if Jackie purchased our Create 25 pack, which is either $150 plus GST per month, or you can pay an upfront annual fee of $1,500 plus GST, she's reducing her average cost of the documents to $72 or less. There is a flat fee per document under the subscription. So our suite of over 65 documents, I think it is, that we have on our platform at the moment, from investment strategies to a minute, to an LRBA, to a new SMSF, to a company, excluding the ASIC incorporation fee, of course, you pay that same standard fee. So in this instance, there's a significant saving from $1,650 or $1,800 if you add your $150 a month to what is $2,400. Now, the break even here is actually if Jackie orders 10 investment strategies alone, because she's paying $165 for the investment strategy, which is equal to the annual subscription of that Create 25 pack, which actually means she has the benefit of 15 other documents that she would otherwise be paying on a pay-as-you-go. So it's not simply a function here of you saying, we're not going to do 25 documents. Understand the type of documents you might be looking at, and therefore assess, well, where is that break-even point for us to be able to look at and understand the benefit of subscription. And someone like David will be able to walk you through that if you are interested in doing so. And we have a document calculator on our website that can help walk you through that as well. And again, whether you want to do that yourself or David can explain that, we'll be more than happy to help you out with that. So as we wrap up today, there are some key takeaways, I guess, that I want you to be aware of. So evidence to support investment strategy reviews is the new phase, in my view, in compliance with SIS Regulation 4.09. The requirements are more than simply having some kind of standard paragraph within a trustee minute that you either create yourself or you're clicking on from within your SMSF software. It is absolutely paramount to this that the trustee can demonstrate how they've continued to consider each element of the operating standard. So to say that the trustees have had a meeting and they've considered risk, liquidity, diversification, in my view is insufficient. How have you evidenced to the auditor that they have considered each and all of those different areas? It does place a greater onus on the trustee to remain active in their assessment on the fund performance against the investment objectives. And this is a great thing in my view, because it ensures that the trustees are very cognizant to the way that they've invested. And if they do need to make changes to achieve the objectives that they're trying to get for retirement, that they are actively looking at this to do so. And that's clearly where advice can come in to assist them in that particular process. And from my point of view and the rest of the team, we are continuing to build solutions deep in the SMSF space that will leverage our expertise and knowledge to ensure that you and your clients remain compliant, but ultimately saving you time through the technology and the integration work that we can do as well. So thank you for being a part of today's session. We do have a survey, obviously, at the end of today. We will send you a copy of our slides at the end of today, include a link to the survey there as well. Thank you once again. We'll have some more information probably later this week about an upcoming webinar on the finalisation of the NALI ruling as well. But other than that, if you are in lockdown, keep your chin up. If you are not in lockdown, we are very jealous. But yeah, I am, fingers crossed, looking forward to getting back out on the road prior to the end of the year. So we do have a number of questions, which I am happy to take on board now. I might just turn the video off for the sake of it. If you need to leave, I'm more than happy to do so. If there's a whole range of questions, I'm again more than happy to make those as part of a Q&A podcast. We will put this recording online for you to go back at and have a look at if you need to, or you want to share with others, which we encourage you to do so as well. But other than that, I will leave it there. Thank you once again for joining me. Take care and bye for now.